As those indicators beautifully show, history is currently repeating itself, and so you can actually profit from that. In today's crude oil video, we discuss the most important technicals, fundamentals, and also macroeconomics of this commodity. We have recently seen that reversal here in the end of 2025. We've seen that big bull market start off here, but whether this is actually sustainable, whether we're actually about to see a continuation of this bullish pressure, we have to take a look at the technicals first and then underline this thesis by the macroeconomics and fundamentals. We have recently seen that volume delta has been coming back to neutral levels. We're also seeing a bearish breakout to the downside here at the RSI below this yellow moving average. And so this is obviously quite bearish from that perspective, since we haven't really seen a strengthening momentum trend here actually occurring. In fact, we have seen that this consolidation actually began here back in January, the 29th of January. And so we obviously do have this long stretching period of consolidation right here now, but we've been able to actually retest this blue trend line here and have this reversal to the upside. We do have this resistance at around $63 per barrel right now, which obviously would be quite bullish if we do actually invalidate this resistance and see another breakout to the upside. But at the end of the day, we have to understand that the underlying macroeconomics are the long-term drivers, and so whether this is just a small rally here to the upside, or whether this is actually the beginning of a new sustained bullish trend here at crude oil, we have to take a look at the past cycles to understand what happened. The last few instances we've seen similar things happen to the financial markets. And as you beautifully see here, we've opened up the weekly chart and also some indicators here, which are the copper to gold ratio, which are the DXY, and also the gold to silver ratio, since those beautifully show you what happened the last few times. We have, for example, this great financial crisis right here that in fact coincided, or this bullish rally that we've seen before it actually coincided to this bearish rally here at the copper to gold ratio. In other words, whenever you do see that copper is actually weakening against gold, as well as crude oil actually strengthening, when you do have this divergence, this tends to be a bearish signal for crude oil, since this obviously cannot actually be sustainable. Quite similarly, we have seen that the DXY has witnessed a reversal from this weakening trend to this strengthening reversal to the upside, which also is quite a bullish factor, as obviously you measure crude oil prices in dollars, and when the dollar is strengthening, that seems to be counterproductive for the crude oil price. However, that does also have other meanings. Whenever you do see that the dollar strengthens, that also shows you that the liquidity conditions are getting tighter. In other words, you tend to see less credit being taken. You tend to see generally that the liquidity conditions are tighter. In other words, you tend to see businesses getting smaller profit margins, etc. And so whenever you do have this liquidity actually starting to get tighter, this tends to be the end of the liquidity cycle. And we at Chronos argue that could be happening again right now, as we also see the DXY currently retest this historical trend line here and this blue trend line. And so obviously a reversal to the upside might happen at this point. Now we do also have to take a look at the gold to silver ratio, as it also beautifully shows you the market sentiment. Whenever silver is outperforming gold, that tends to coincide to a risk-on environment. We've, for example, beautifully seen that happen here after the COVID crash, when QE started, when all of those stimulus packages have been released. Obviously, that is a risk-on sentiment. Now, we have seen that also occur here at the end of the year. However, we haven't seen risk assets like, for example, Bitcoin actually rally. Now, that is a really interesting thing that we've seen happening, because this rally here to the downside hasn't actually really been marked by a risk-on environment. It has been more or less a debasement trade of the dollar in our perspective at Chronos. However, what we're currently seeing happening to this ratio again is that we are seeing it rise, and so in other words, we do tend to see that gold is starting to outperform the silver prices when the flight to safety is happening, because obviously gold is this flight to safety asset, and we tend to see it outperform silver in times of economic uncertainty, as we've beautifully seen before those last few crises that we've seen happening here at crude oil. And whenever we do start to see this reversal from a weakening to a consolidation and then eventually a upwards trend at this ratio, which we are currently seeing, that should actually be interpreted as a warning signal, which we have to do at Chronos. And so we just want to convey this to you to actually make you aware of this situation that we're currently in. And so if you don't want to miss that in the future months and in the future videos, please make sure to subscribe to our channel and like the videos so you support us and also don't miss those videos. Also check out our Discord server, which is also linked down below. And so now to conclude from this video, we have to understand that those ratios and the dollar strength that we have just assessed do in fact currently mimic what we've seen happening before the last few crashes. We are seeing that reversal potential here at the DXY, as we've seen that long stretching trend of the DXY weakening. We could see it strengthening again, and so that is quite bearish. In fact, this signaled a lot of downturns here, essentially on this trend line. We have also seen that reversal here at the gold to silver ratio, and also this divergence, or at least that bearish trend here at the copper to gold ratio. And those combined do in fact make us quite conservative concerning crude oil. We have obviously seen that bullish trend form out for quite some while now, but we have to understand that this is from a longer term perspective and from a macro perspective not necessarily sustainable. We have retested this bottom support at around $54.99 per barrel, which obviously is the most important support at this chart right here, and essentially we might come back to it, and we might also see corrective movements happening. It's quite hard to time the market. For now, we haven't seen the invalidation of this blue trend line. If we do actually see that happen in the next few days, we are going to update you on that, which could obviously lead or could actually be the beginning of this corrective movement, or maybe even downturn crash that we might happen to see here at crude oil in the next few months. And so if you don't want to miss that, please make sure to subscribe to our channel and like the video. Thanks for your support. It's really great what we've been able to build up in the last few weeks and months. See you the next time. Bye bye.